Good morning. It is June 25th, 7:58 a.m. Eastern Time, and this is the weekly update for the stock market. We're going to keep it to just the U.S. stock market. We're going to limit some of the outside and super long-term market information and model outputs, in my opinion, and just try to keep this brief here and focus on mostly the short-term, intermediate, a little bit of long term. So here's the daily chart of the S&P E-mini futures. It's a continuous chart. It just rolled to the September, okay, and we use it as a proxy for cash, and we use it for a proxy for the entire stock market. So back on June 21st said anticipate 5 to 9 days of net buying, and it's going to be inside the level 3 trend, and it's going to be mostly the level 3 trend buyer doing the buying, a level 3 trader. The level 2, level 1 trader would probably continue to accumulate going along with it, and they're actually the more bullish, at least in the sense of trying to hold on to stocks. Bottom line, as you can see, we've been right. We've had 4 days of upside action here. Now, a level 4 intra-week top can occur today, and the market may be down Sunday night into Monday and then back up on Tuesday. It is a possibility that a level 4 top today could trigger a level 3 top today, but ideally the top is due sometime next week, and it's looking more like maybe Tuesday would be the earliest. But if for some reason they bought it all day today and Sunday night into early Monday, I would allow for a top as soon as Monday. So I think there's more upside to come. I don't think they're done buying. I think they like some of the news that's going on here, that maybe the infrastructure bill has a chance to go through in terms of the government and political side of things. Meanwhile, the economic numbers, the macroeconomic numbers still look good. We had a very good GDP of over 6% estimate for the year. So the bottom line is the economy is growing, people getting back to work, and we're doing business, spending money. And the companies are going to make money, and I think there's a reason to push stocks higher. Now, there will be a level 3 bottom sometime late next week. Ideally, it won't show up to early the following week, okay? So bottom line is, looks like it should go higher in the next week, then down from next week into early the following week, and I think it's going to be rather limited downside. It may not even work in terms of trying to be bearish for that trade. And the reason is, I think they're going to go return to buying and push it still higher into a level 1 top, perhaps do as soon as July 6th. But I'm going to show you on the weekly chart it's really pointing towards July 12th as the earliest week for a level 1 top. Now, when that level 1 top occurs, what it means is the level 1 trader's been buying since February, or at least since early March, is going to see the reasons to actually back off, take profits, and the level 2 trader is going to do the same thing. And then the level 3 trader, at least briefly for a few days, might be right in line with them and be a little more aggressively bearish. Then later on, they'll cause some of those twists and turns. Sometimes they'll go against that bearish outlook. Now, the level 1, level 2 are so important, especially the level 1. We do have to consider it may not just be profit taking, it may not just be money flow where they can't buy anymore and they've got to sell some first. We may actually see headline news that's just more important than the day-to-day, week-to-week news, and it's bearish. We may actually see fundamental forecasts, calculations, and perhaps even fundamental evidence that something isn't quite right, and it worries them, and so they sell more than they normally would from this type of trading. Now, the good news is a level 1 bottom ought to show up late July into early August. I don't think there's a lot of downside here, but there could be a sizable decline. So we got to watch out for that. To me, since it's the most important signal during a year, why not sell some, even if we're wrong and it just continues to go higher? Likewise, if it does come down, it's going to be one of the more important buy opportunities within a bull market, even though there's no guarantee that consecutive level 1 bottoms will be higher, meaning you might buy it in early August only to find out early next year you're buying the same price or a little lower, but yet it's still in a long-term bull market. So anyways, I think there's opportunities to go higher here into July. It may extend even into late early August. Now watch the 5-day average here as nearby support for this level 3 uptrend. That may be a demand level. If it's violated, then you have to be concerned. We've seen a top. I think trade below the low at say 42.30.50 would be a sign of probably a level 3 top. The daily stochastics rolling over, preparing for top, narrowing spread, preparing for top, and it's extremely overbought. So the technical side is warning the model can be right for a level 3 top, but does it occur today or next week? I say next week. I think they're going to push it farther. I think it'd be a bit unusual and a bit early to top it now. I'm bullish into next week. Now let's move on to the weekly chart, and this allows us to zoom out and compress the S&P 500 as a proxy for the entire stock market. Here's our 5-week rolling forecast, and it's suggesting it's going higher into July, week of July 12th, the earliest for a top, even though I just told you the daily chart's warning it might be a week early, okay, or a few days early. And it is suggesting new highs into there. What could occur is it pulls back some only to go higher here, so this 5-week rolling forecast could be wrong. It could extend higher all the way into early August, then decline for maybe only a week or two for a late level 1 bottom. Otherwise, the model is saying if we can, with the highest probability is look for the earliest first and then lower that probability and change it and shove it out to late occurrences for these downtrends. So what it's saying is that there ought to be a setback in July. And it's saying it could set back to this week's low or a little bit lower before moving higher later this year. So the point is, this is a price flow concept that's giving us a hint of money flow, but also giving us a hint of when fundamentals and news could change. And it's saying try to be bullish at least for a few more weeks here, and maybe we'll have to be bullish through July. But just keep in mind, July into August, there's something to occur that's one of the more important down moves during a year. Okay, but for the moment, it's giving us a thumbs up. We've got a new record high in the futures. So a risk point would be if it trades below this week's low, we've got a problem. We have to consider it wants to go lower into that level 1 bottom, even if it hasn't properly placed a level 1 top. It's going to be choppy, it's going to be sloppy, a roller coaster, and maybe just outright bearish in the sense we missed something. So that if you want some kind of trailing stop or risk point, it's this week's low, okay, at 4126.75 for the futures. Now, what else I want to do is move back. I think it's under the daily. I've got to find you. This is the SSO fund I use. And I keep forgetting to give you updates on it because some of you like to follow me on it since I use it so much. This is a pattern coming down in level 2, going up into level 1. This was kind of some kind of halfway point, and now it's going to do this. And it's already gone to a record high as of this week. And we have a weekly stochastic rolled over for a sell signal, is trying to roll back for a buy signal. I think it'll get accomplished next week. Okay, even though they may sell some for the level 3, I think it's probably going to stay high enough to give us that buy signal. And maybe if they were really robust buyers today, maybe we can get that buy signal even this week. Upside objectives around 123 to 127, maybe even on up to 132. I'm a little suspicious the 123 is going to hold this time around. I don't know if there's tremendous upside here for us in that market. All right, watch the 5-week average also as nearby support. Again, I said watch this week's low. For the SSO, you could use the prior week's low. This is just a day session chart. Even though I've got extended hours on it, it's not going to necessarily line up right to the day, the hour with the futures, because the futures trade a long overnight market. So that's all I've got for you in the near term, is that yes, obviously they can sell every other day or something like that. They can give us these intra-week day trading type swings, but ultimately it looks like it should move higher into next week. We'll get a little bit of a setback or slowdown or something, and then it's just going to move higher later in July. Now, let's switch over to some long-term stuff here, and what I want to point out is the LT1 trend is up from last year's low to a top due next year. Upside objectives are 43 to 4600s. Now, next year we should get a setback. That would be the better time for a 10% correction, even though we could have a 10% correction in just a few weeks even. But I don't think that's going to occur. Okay, I just don't think it's going to be all that much downside this time around. But next year can be different. It may even come in late next year, more towards the elections, and we really don't have solid economic bearish factors and fundamental factors, and instead we just worry over the election. It can be a variety of things that can cause it. Now, once that's out of the way, we'll get another LT1 up into 2024, and then there'll be another one going into 2026. And the point is, an LT2, a mid-sized long-term business cycle top, can occur 2024 to 2026. Upside objectives for the moment into 2024 are 5100s to 5600s, but I can see how that could delay or is used all the way into 2026. Now, we should then recycle those LT1s, LT2s to create another pattern from some bottom in 2024 to 2026 into a top in 2028 to 2031. And that should coincide with the 9-year business cycle that's the same as the LT3, but the 9-year can also be used in the macroeconomic model, and we also use the more official business cycle of the juggler cycle that relates to these cycles I'm talking about long term. Hold on a second. The juggler cycle is a macroeconomic cycle. I don't use the name in the price cycle, but it's really the same as 9-year in the LT3. The juggler cycle relates to economy growing 7 to 12 years and 1 to 3 years of recession. So ideally, 2028 to 2031, we should see a recession. And it's a primary recession. It should be more important than any recession we see now until the end of this decade. We could see a secondary recession in 2024, 2026, but it'll probably slip under the radar screen, and economists and the government won't even acknowledge it. So it may hurt certain types of people and businesses, and not the entire economy, not the entire country, and some people won't even know about it. Those who did very well in the recent recession may not do so well in that secondary recession. But the real thing to watch for is the primary recession, which again may start as soon as 2026, but we're targeting 2028 to 2031. That's what you got to watch out for. That's when the stock market can fall 20 to 60%. Okay, and we'll talk about more of that and later, but let's finish this up here. The upside for this LT3 relative to that juggler or 9-year macroeconomic cycle is 6,800s to 8,500s. So there's still tremendous upside, even though we're going to have perhaps heavy, strong inflation and strong interest rates. The economy is going to grow stronger than what we've seen in many, many years, decades. It's already there going, I think we're already like at a 7-decade high or something for GDP. Okay? Now, I do think inflation will calm down a bit in the next few years. I think it'll even be lower next year than this year, but overall, we're going to have more years of inflation this decade than the prior few decades. All right, so now let's switch to some outside markets here. And for the bond market, I think it's basically range trading, but prices should move higher into July. That means interest rates should move lower. And I think the bond market's saying it's not really that scared of higher inflation this year. It probably thinks lower inflation next year, and I like that because that's what I think. That's what the model research is suggesting. Now, prices can decline by August, and that could have something to do with the stock market falling a size amount. Scares the bond market a little bit. People buy bonds, pull money out of stocks, put it in bonds. It may also be something that would have to do with inflation. But I think ultimately it's going to be a minor drop in prices and a minor increase in interest rates. I think we've seen the minor long-term bottom LT1 in prices, therefore a top in interest rates. Remember, the super cycle, however, is up for interest rates. It bottomed last August, and I correctly called that during that month with the use of this modeling. So super cycle suggests higher interest rates next few decades, but it warns that primary recession could knock interest rates all the way back down or nearly to that low, only to see it right back up the next decade, that kind of thing. So yes, interest rates will be down towards the end of this decade for a recession. So will inflation, so will GDP, okay? People are going to lose jobs, there's going to be some business problems. But the overall trend is likely up in the next decade, if not the following decade, for interest rates and inflation, something different than what we've seen in the prior 40 years. Okay, on the dollar index, little setback here. It may have topped for L2 and is going to work lower into late July or so, early August. But at the same time, this may only be a level 3 monthly kind type of swing trend, and it can pop up perhaps one last time. So the dollar could be higher next week. It is overbought, warning that yes, we should look for a top, but this widening spread, even though it's starting to narrow now, it's a wide enough spread to be concerned there could still be lingering upside momentum. I don't know how to handle this. If you're feeling bearish the dollar and need to trade it, I think you go ahead and trade it to the downside. Just realize you may be early. You may have to get stopped out, get back in, try it again, or you're going to have to ride out some loss before being right. Now over in the gold market, I'm concerned gold isn't going to do anything. It's going lower into August, but there should be a level 2 top in a few weeks, so it could have a little rebound. Maybe it's going to rebound back to this 5-week moving average around 1830 and then move lower. I just don't like gold, okay? And I am a super cycle bull in gold, but I just question how well it's going to be used. I don't think they're really using it for inflation hedging anymore. They may like copper and some of the other commodities, but I think they're going to bow out of all those commodities. I think the trend is down for commodities in general into next year, even though we haven't found a top yet for gold. All right, I'm sorry, for crude oil. This is Bitcoin. I think it's got lower to go. I wouldn't be surprised it collapsed. One of the big major banks said it may only be worth about $23,000. That makes sense to me. Let's move on to crude oil. And crude oil should go higher for another week or 2 or 3 or 4, something like that. But I do think come July, it'll top for level 1, and the second opportunity for a minor long-term top, an LT1, or under the old labeling system, a 3 to 4 year cycle, business cycle. And crude oil could work lower into next year. And again, I think we're pretty much done with how high inflation's going. I'm not saying it won't go a bit higher in the next few months of reports, but I think we're already starting to lower prices here. I'm seeing in real estate where people are shooting their offering price or asking price really high, but now they're waiting only 2 weeks and they start lowering it, and are lowering it every 2 weeks. Okay. Any rate, that's my weekly update for the stock market. By the way, in real estate, we met. I work with a family real estate business here. I'm now even a broker for something to work with here extra. And we met a billionaire who's working on a $2.5 million real estate project here in upstate New York. And that's more along the lines of farming, agriculture, land investment. I think a lot of the rich are saying, even though I got to pay taxes, I think I'd rather own land than Bitcoin or gold. Think about that. All right, past results are not necessarily indicative of future results. Have a great day. Have a great weekend. Stay safe, stay healthy. Let's give the bulls a chance, but let's keep looking for an opportunity to take a little profit in the stock market. With hopefully we can buy it a little cheaper and even reinvest those profits so we can gear up for more profits going into year end. Thank you.